You're listening to a Mint podcast brought to you by HT Smartcast.
Hello, listeners. Welcome to the latest episode of Why Not Mint Money. I'm your host, Jash Kriplani. In today's episode, we'll be talking about the latest investing trends and the investment preferences of the Ultra HNI families. To tell us more about it, we are joined by Nirbhay Handa, who is the CEO of Multipolitan, and along with him, we have Sandeep Jain, who is the Senior Managing Partner at Multipolitan.
Welcome to Why Not Mint Money, a personal finance podcast where we help you understand basic money concepts and share strategies for you to build your wealth. So let's get started with your money journey.
Hi Sandeep and Nirbhay, welcome to the latest episode of Why Not Mint Money. It's really great to have you guys here. So Nirbhay, we'll start off with you. Can you tell us about, the wealth report that you guys have come up with recently? And generally, what are the trends you're seeing as far as where rich are investing their money?
Thanks, Josh. I believe we're seeing a colossal intergenerational wealth transfer. So, we're going to see the wealth is going to be passed on from baby boomers to millennials and Gen Z. And the investment preferences of millennials and Gen Zs are starkly different from baby boomers, right? I think you would agree, Josh, that the way our parents probably invested is not the way that, we invest in this generation, right? So there is rise of alternative assets. I think Gen Zs and a younger audience, millennials, they have higher appetite for risk. They're also very open to, investing in equities, particularly mid-cap and even small-cap equities at times, right? Similarly, we feel millennials and Gen Zs, they're more entrepreneurial, right? I think we've seen more first-generation entrepreneurs than ever before. And I think that's primarily been because of the democratization of wealth generation opportunities, right? I also feel this generation is a lot more transnational and globally minded. So we've seen many high-net-worth families embracing the idea of holding an alternative residence, right? And that could also be to navigate multipolarity that we're seeing on a global scale at times. Digital assets are obviously very interesting. But again, with what we hear about climate change and, we also experience the impacts of climate change, investors are really keen on climate forward businesses, right? And we've also seen a lot of shareholder activism at the back of that, right? Particularly companies like Apple, for example, issued a green bond. Google has issued a sustainability bond. Topics like diversity and inclusion have also become very, very interesting because I think Gen Zs and millennials are impacted by it more than the previous generation. And at the same time, this generation is really focused on investing in areas which are aligned with their personal beliefs. And, I would say profit with progress is really the buzzword, as I see it in terms of investment preferences.
Got it, Nirbhay. And Nirbhay, can you give us more insights about what kind of asset classes Ultra HNIs are preferring? Is this mainstream or is this alternates? How are they looking at that space?
Yeah, so I would say there has been an emergence of alternative assets, right? There has been a lot of inclination, particularly with Trump getting elected. We have families looking into digital assets, and you can also see a lot of the legacy institutions. For example, Julius Baer, they invested in a bank called SEBA, which is a digital asset bank. Goldman Sachs back in the day invested in Circle, which is a company specializing in digital currencies. Standard Chartered recently launched their spot trading desk in London for digital assets. So we're seeing a lot of legacy institutions getting into the digital asset space, and we're going to see a lot of institutional investment going into that space going forward. So I would say within the alternative asset space, apart from equities, there's a very strong narrative on digital assets, right? When it comes to equities, there is a natural preference towards ESG compliant companies, right? There's a natural preference towards companies that make a real difference. We've seen companies like Oatly reach a valuation, for example, of $13 billion. Sustainable agriculture is again something which is very interesting. We have Beyond Meat become a very large brand, particularly because of the interest that they're receiving from a younger audience. I would say renewable space is also very interesting. Sustainability, again, these are the key areas where we're seeing there's going to be a lot of interest. But then you also have, particularly for the high and ultra high for the individuals, you have alternatives of alternatives. So, art as an investment is something which a lot of families look into. Indian art has become globally very interesting. I don't know if you read about Amrita Shergill's painting called The Storyteller. It was sold for about $7.5 million. Wine investment, I was actually quite surprised to learn the LiveX's Burgundy 150 index for Pinot Noir shows over 10% annualized returns for the last 30 years. So regions like Bordeaux, Burgundy, Champagne, Tuscany are amazing regions for investing into the fine wine world. But then you have new regions like Napa Valley and Piedmont also coming up. You have vintage car as an investment. So, particularly we did this wealth report and we had the president of Singapore Car Club, Kumar Balasingham. He speaks about how classic cars made post-war, which is around 1940s to 60s, they become a real asset class and they are appreciating. And the interesting part about vintage cars and asset classes, you can actually feel them, sit in them, and you get to be part of a small piece of history. Very similar to that.
And of course, you can
whiskey.
drive them.
And of course, you can drive them if you take care of them, right?
Right.
Whiskey cask is again similar to vintage cars. Has seen a lot. Again, it needs careful management. Whiskey carries risks, storage, authenticity. So I would say these are like the alternatives of alternatives. And these are some of the areas where we're seeing a lot of interest from high-net-worth families. But I would say alternative residence has become a real asset class, and families, understand the importance of holding an alternative residence in this multipolar world. So we definitely see a lot of interest, particularly in India doesn't allow dual citizenship. So acquiring an alternative residence by investment, ability to sort of diversify your portfolio with overseas assets, new currencies. I think that's quite interesting for families across South Asia.
So Sandeep, coming to you, how do you see Indian families changing their investment preferences, and how are they handling this intergenerational wealth transfer?
So typically, Indian families are undergoing a significant transformation in how they manage wealth and prepare its transfer across generations. Traditionally, they were favoring investments in gold, real estate, and fixed deposits. And now we see that families are now diversifying into global equities, alternative assets, and digital currencies. We typically now see families are increasingly investing in international real estate and residency programs, seeking opportunities for global mobility, business expansion, and also geopolitical security. These investments are now aligning with their growing preferences for a borderless lifestyle and also getting access to global markets. Secondly, to manage growing complexity, families are adopting professional wealth management solutions. They are now using structures like trusts, wills, and family offices to ensure structured intergenerational wealth transfer, minimizing conflicts and preserving wealth for their future generations. And additionally, families are also incorporating environmental and government principles and philanthropy in their financial plans.
What about Gift City? How Indian families are adopting to Gift City, which is now increasingly emerging as a global investment hub in itself?
Gift City is now fast emerging as a preferred destination for Indian families who are looking to optimize their wealth, access global markets, and also streamlining intergenerational wealth transfers amongst themselves. First of all, one of the key attractions for Indian families is the Gift City's neutral tracks framework. By establishing trust or family offices within this jurisdiction, families can now efficiently structure their wealth and minimize their tax liabilities. They could also benefit from the inherited taxes, which ensure smooth succession planning. Secondly, income earned from financial instruments in the gift city, such as interest, dividends, and capital gains, also often exempt from income tax, further enhancing their returns. Thirdly, Yash, the city is also unlocking a lot of global investment opportunities. Through entities like alternative investment funds, families are gaining access to international equities, real estate, and other assets, all while adhering to the Indian regulatory framework. And lastly, in addition to the financial benefits, Gift City is also becoming a hub for family offices. It provides access to international banking, forex services, and capital markets in a single jurisdiction, simplifying operations for families with global financial interests.
We have also seen how global residency programs, immigration planning, all these things are now also becoming something of an asset class in itself for the wealthy families. Can you elaborate on that? Why are they looking at this with so much more seriousness now?
You rightly said Indian families are increasingly exploring immigration options and residency programs as part of their long-term wealth and asset diversification. Currently, residency programs which require real estate investments are in much sought demand, and because they provide attractive returns and intangible value by facilitating freedom to live, work, and retire anywhere in the globe. Entrepreneurial Indian families leverage residency programs to expand their businesses globally and also get access into lucrative markets. Indian families are also prioritizing premium education for their children. Residencies in countries like US, UK, Canada, or Australia. These programs improve the access to world-class schools and universities and also open pathways to competitive global job markets. And last but not the least, the rise of remote work and digital nomad visas is also resonating with younger generations of affluent Indians, allowing them to enjoy flexible living and enhanced lifestyles. Therefore, Indian families no longer view immigration residency as mere relocation strategies, but as a strategic tool to secure a better future. With a focus on multi-generational benefit, financial security, and global mobility, these programs are becoming an integral part of their wealth planning and legacy building.
Great. Thanks a lot, Sandeep. Thank you, Nirbhay, for joining us today and sharing all those insights with our listeners. Thank you, listeners, for joining us today. If you liked this episode and would like to hear 2 more such interesting conversations, do log into our channel, Why Not Mint Money, on Spotify, as well as other platforms, where you will find me omnipresent. Also, if you have any new ideas or suggestions, you can DM me on Twitter. My Twitter handle is @Jash Kriplani, that is JASHKRIPLANI, or y'all can always mail to us at mintmoney@livemint.com.
To stay updated on this podcast, follow us at HT Smartcast on all the major social media platforms. To listen to more such podcasts, log on to www.htsmartcast.com.